as we add more and more and more interest into a very small market space, the ability to hold it back against a tide of global demand, I think, is eventually going to reflect prices that move up in spades to what we've seen this week.
Physical silver and gold in your hands, personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is Andy Schectman, our president of Miles Franklin. Andy, thank you so much for joining us today.
Good to be here, Elijah. Thanks for having me, bud.
Yeah, it's great to have you, and always great to have you on these weekly chats. Now, the first topic I'd like to discuss is how we're seeing a rally this week in precious metals. What do you think is causing this rise in the prices?
This may sound like a cop-out. It's not meant to be, but I typically don't look at or pay much attention to the daily, the weekly. I have always been more of a big picture person as it pertains to precious metals. Frankly, I believe that they should have rallied a long time ago, that they should be a whole heck of a lot higher. The level of demand that we see globally, Elijah, is off the charts. And the mints are all struggling to keep up. You're seeing unallocated programs really breaking apart right in front of our eyes. I was looking at the April delivery numbers the other day. Just the first 2 days of the April delivery contract saw over 20,000 gold contracts delivered. That's 2 million ounces of gold that were delivered just in the first 2 days. We saw record deliveries in silver in April, and we're expecting maybe even considerably more on the next delivery month for silver. So the demand from the top on down is, I think, disconnected from the paper price. And we've talked about how that happens and how on February 1st and 2nd, you had 2 years worth of silver dumped onto the market at the open in the most bullish of environments, which drove the price down $3. There's management, but the management, which has in many respects been aided by the synthetic unallocated programs, seem to be gathering steam globally rapidly of the perhaps risks associated with pooled unallocated accounts, and whether it be SLV or a lot of the pooled accounts around the globe. I don't know these to be 100% true, but I will tell you that I'm getting dozens of emails a day from people who are validating what people like John Adams are saying. And it's a very unique time, Elijah, where I think your gut really is saying something that is conflicting with the price. And, who do you go with, your gut or your eyes? And I've always been a big believer of trusting your gut and realizing that this is a very high stakes game, and they're tried to hold back the price of metals. But I will say this unequivocally: the only way you can successfully manipulate a market over an extended period of time is to push it in the direction that it is going. And when no one wanted it, it was easy to hold it down. But now that the global sentiment is increasing, and understanding and awareness due to the problems with fiat currency and the proliferation of cryptocurrency, there is an awakening. And as we add more and more and more interest into a very small market space, the ability to hold it back against a tide of global demand, I think, is eventually going to reflect prices that move up in spades to what we've seen this week. So I look at gold lately and silver over the last several years as kind of being the tortoise. It's not the hare like Tesla and Bitcoin, but if you look, silver was up 50% last year, gold was up 30%. So that's hardly a tortoise in historical perspective, but go back and look over the last several years, it's really done very well. Both have, but in a manner that is maddening if you watch it from a day-to-day perspective. So my advice to everyone is to take a step back, see the big picture, and don't be emotionally affected by the day-to-day swings, because really the fundamentals are detached from the price.
Now, mentioning all the demand we're seeing, it is very interesting, and definitely if our viewers are interested in learning more about the manipulation debate, they can see the link for that in the description of this video. Mentioning the demand, though, I wanted to ask you about the central bank demand for gold. We saw from the World Gold Council, they reported that central banks are now again net buyers of gold, when we saw, I think last quarter, them turn negative just slightly, but now they're back to net buyers of gold. Hungary, the Central Bank of Hungary, actually has now tripled their gold reserves. So what is your perspective on this, on the shift we're seeing once again, for central banks to become net buyers of gold?
Well, Elijah, I've been talking about this for a while now. I mean, it started in 2017 when they were all net sellers, and the Bundesbank took their gold back from the the New York Fed. And shortly thereafter, the Bank of Hungary was next on the list to do the same thing, along with Turkey and Austria and the Dutch National Bank and Poland. And well, they've all been huge buyers since 2018. As we remember, in 2018, after being net sellers, the central banks bought more gold as a group than they did in the previous 60 years combined, and bought 90% more in 2019 and copious amounts more in 2020. So I would debate whether or not the net selling aspect was even really true, courtesy of the World Gold Council. I think they've been buying it the whole way up, and maybe it has something to do with the Basel III agreement, where they have to have allocated gold versus unallocated because of the new regulations in terms of equity to debt ratios, and maybe they had to rebalance things. But I don't think, I would debate whether or not they really were net sellers. I think they've been buying the whole way up. But look, I've been saying this too, that the linear progression that I have seen since 2017 is exactly that. The most well-funded, well-informed, influential traders in the world, the central banks, the commercial banks, the sovereign wealth funds, and the family offices, they're gobbling the stuff up. And they're, as the Bank of Hungary is doing, they're removing counterparty risk. They're taking possession. Here last month, we saw a tremendous amount of gold and silver delivered on the COMEX contracts, but we saw 35 million ounces taken out of the building. Now, who's taking it out of the building? Is it the industrials? Is it Elon Musk? Is it Sony? Is it Apple? You put it together, you're seeing it from the top on down. The central banks taking possession, the commercial banks taking possession. When SLV in February 1st and 2nd had all of the record inflow, huge amounts, record, and then the price fell over the ensuing few weeks, the authorized participants, a la the commercial banks, backdoored 90 million ounces out of SLV. So the central banks, the commercial banks, and now all of the stuff we're seeing coming off of COMEX, on top of all of the problems we're seeing in the UK with the Perth Mint. You got Mexico saying they're going to limit or hold off sending any libertads out of the country. I mean, follow the narrative, see the big picture. Who cares about the price? The big picture is of the big sophisticated money front running this. And I've been screaming this, and maybe my message gets redundant, but in my mind, that's all that really matters, because everything that I've ever seen in finance in 31 years tells me the big money always wins, because the big money holds the cards. They know the information before the rest of us figure it out. You can see what they're all doing. They're repositioning and de-dollarizing. They're using gold, which was revalued as a tier 1 reserve, the highest level of value right next to cash, and they're selling dollars to do it. So you're seeing it everywhere, from the COMEX to the central banks. down to the local coin shops that are running out of products. So that to me is really the most important thing that you mentioned or that we've talked about is, what that bank, the Bank of Hungary is doing is the same thing that I've been talking about now for a couple, 2-3 years, that the biggest money in the world is repositioning. And we're all going to wake up one day and say, how did I miss that? People who listen to you and I won't have missed it, but most of the United States will have.
You mentioned how this move by the central banks is really a de-dollarization. They're looking for an alternative. It is kind of telling, like, that central banks at all hold gold, because it's like, if gold isn't money, why are they holding it in the first place?
Because it is money, and it's been money for 5,000 years, and it has been agreed upon by all of human civilization that it is. And I think that, there's an old saying that the more things change, the more they stay the same. As far as central banks are concerned, it is money, it is wealth, and will always be valued as wealth. And that, not only that, why would the Basel III agreement have levied gold to a Tier 1 reserve? Why? If not for it to be hugely important. Why would the central banks all pull their gold back from the Bank of England and the New York Fed? Why would they all start copiously buying it since 2008? Why are we seeing so many massive deliveries on COMEX by the wealthiest private investors in the world, the family offices and the sovereign wealth funds? What's a family office? It's a hedge fund with less restrictions. Huge money, buying huge amounts of metal, standing for delivery, and now pulling them off the COMEX altogether. So that's the way you do things. You have to remember that we're all being misdirected by price and rhetoric. And if you're able to take a step back, and if you never saw the price, if you never knew what the price was, but all you saw was what happening on the retail level, what the central banks are doing, what the commercial banks are doing, what the family offices are doing, and what the sovereign wealth funds are doing, and then tried to come up with a price, not knowing what it really is, I guarantee it'd be a whole hell of a lot higher than it is right now. And that's what I'm getting at, is that price is a tool of misdirection. The big money is misdirecting the public with levered futures contracts to create a narrative that gold and silver are archaic relics of the past, when they couldn't be further from the truth. And they are, by their actions, showing that. So it's the same old crap we've seen forever. But remember, I've been doing this for 30 years. Most of the time, no one wanted the stuff. And now, couldn't be further from the truth as well, and growing. And when that groundswell of interest continues to grow and accentuate, these problems with supply and unallocated synthetic programs and pooled accounts, and it's all going to blow up. And that I do believe to be true, because it's an eye drop of water in an ocean, the amount of gold versus the money supply. And so, if everyone bought 1 ounce of gold and 1 ounce of silver, there'd be nothing left for the rest of the world. So, just here in the U.S. So that there's just not enough of it out there to be able to not allow for real price discovery. If we start to see a growing interest, 5-10% portfolio allocation across the board, you'd see prices so high you wouldn't believe it.
Moving now to viewers' questions, Matt is wanting to know, if price does rise incredibly high, then what's to stop governments from taxing it when it is sold? That's kind of, E.B. Tucker has pointed this out, that there could be this taxation when you sell precious metals in the future, and that's kind of like modern day confiscation in a sense. What is your perspective on the possibility of that?
Oh, sure. I mean, I think if you live your life worrying about what is or what could be instead of what is, really, you're paralyzed. You never do what needs to be done because you're living under the shadow of fear. A profit's not a 4-letter word. And, you get taxed, you get taxed. You have to live somewhere. There's no way around that. I'd rather choose what has historically worked for 5,000 years. And could there be a wealth tax or a windfall tax, rather? Sure. Maybe not, though. But I'd rather be in a position to pay a tax than be kept in a currency that is being destroyed with no alternative, no out. And so at least you have a fighting chance. You have a chip in a chair, as they say, because if you're stuck in dollars, when things start to blow up, good luck. Good luck with that. And so, I'd take my chances either in a black market, trading with people, or paying a tax versus being trapped in a system that's being eviscerated.
John is wanting to know, when the gold-silver ratio falls and it might be a good opportunity to trade silver for gold, do you think it'll be hard to do so?
I never would have said yes, but I will tell you that there's a possibility. I mean, every one of those trades I do with people, and there's been a lot lately, I tell them that I think ultimately you want to be in gold when that ratio snaps back. Getting gold right now is not easy, and I mean, let me rephrase that. We have plenty of gold, but getting it is more difficult than it's ever been. I've never seen a time when the U.S. Mint went on ration protocol with eagles and buffaloes the second week in January. Normally we see that at the end of November. So could it happen? Yeah. I mean, look, the one thing I learned in 2020 is that anything can happen. Stuff that none of us would have ever thought would have happened has already happened. And living in the epicenter of strangeness here in Minneapolis, at least for another few weeks till we move, is really solidified that in my mind. So could you make a trade that is by all metrics the correct thing to do and then find that you can't get any gold? Yeah, absolutely. Do I think it'll happen? No, but here again, going back to what I was just saying, and we've talked about this so much, Elijah, 0.5% interest in precious metals in 2020, the beginning of, with a 2.5% mean over the last 40 years, with 8% in 1980. What if we got back to 8%, where everyone owned 8% of their portfolio 8% of everyone's portfolio was in precious metals, 8,000 per 100,000. That's it, in precious metals. Well, that would be a 16-fold increase in demand in anything this industry has seen in 40 years. So, a 16-fold increase in anything is extraordinary. The supply chains would bust. There'd be nothing left for anybody. Could that happen? Sure. What would that mean for silver? Silver would be a hell of a play also. So, good question. The what-if questions are always hard. I would say you hope for the best and prepare for the worst. And if you get stuck in silver, it's really not a penalty because, in terms of utility, there's nothing more in demand, in my opinion, than silver. I look at it as actually the opportunity of a generation, with the caveat of, maybe ultimately you want to be in gold, but silver is a pathway to, in my opinion, a whole lot more gold and fantastic profit potential, when that's usually the last thing I focus on with precious metals. But what we see in silver supply, global mine supply, demand, and utility and expansion of utility is enough to make me say it's the buying opportunity of a generation.
You mentioned how it's hard to get gold as well as silver nowadays, and really with the silver squeeze, the big story has been how there's been shortages of silver. But at Miles Franklin, how does the demand for gold and the demand for silver and the shortages we're seeing, or the ability to obtain gold and silver, how do they compare right now?
I would say silver represents 90% of every transaction we're doing or more. There's so much discussion around silver that it really is the focal point. And getting supply is a full-time job. I've often made the comment that there is no bull market like a gold bull market or a precious metals bull market because it's predicated on concern and fear and preparation. It's not about greed and profit as we see in other asset classes. And therefore, the crazier the world gets or the higher the price gets, in general, people's grip on their gold tightens as their motivation for buying it to begin with is reinforced. And so there's no secondary market supply. That's first and foremost. Then you have inefficiency at the mints. And now you see smoke coming up from the UK mint, the Perth mint, and also inefficiency at the US and the Canadian mint. So the centers of global production are inefficient, and the ability to get product is a full-time job, and it's really difficult. And when the mints run out of supply, that's it. If the mints shut down or run out of supply or demand outpaces the ability to produce, there's going to be nothing for anyone to get because there is no secondary market. You look around all the online companies, you won't find anyone selling backdate anything. It's all 2021. And if the 2021s stop for whatever reason, you tell me, where do you find it?
That's a really good point, and it'll be really interesting to continue to cover this and really see what happens in the future for supply, because it seems like a very, very fragile system right now. And, who knows if demand will let up. It probably, assuming your opinion, that it probably won't.
Look, until several factors are in place, it won't. Like, first and foremost, until real interest rates are higher than the rate of inflation, the bull market in metals will thrive. Until they stop printing away our currency to worthlessness, as it will retrace to its intrinsic value of zero, the bull market in precious metals is alive. And I don't know, Elijah. I think that we are, if I had to, look, I don't like to be a purveyor of doom, but I see bad things coming before they get better. I see massive inflation, maybe stagflation, which is rising prices characterized by little or no economic growth. I see socialism. I see the loss of free speech. I see all of these things that are happening and growing with acceptance. Excuse me. And it frightens me. And I see increased taxation on people that create wealth. I'm leaving Minnesota, and that's a big reason why. The income tax rate here in Minnesota, the top rate is raising to 13% or 12.75%, on top of a 39% federal rate. I mean, at what point does it become immoral when you're working day and night and you're paying over 50% of what you make to the federal government? And if you own a company, you end up paying double FICA, which is 7.5% twice over a certain number. I'm making 37 cents on the dollar. At what point does it become immoral and just flat out wrong? And, I think it already has. So the path of raising corporate taxes, raising income taxes, raising capital gains taxes, raising property taxes, it's going to have ramifications. And if they think the road to prosperity is through printing and taxing, I have a bridge to sell you. And I think until this type of narrative disappears, goes away, it's not going to get better anytime soon. And quite frankly, the path that these genius politicians have us on is a path of destruction, where the value of our currency is going to disintegrate. And when you have all of this debt accumulated at the lowest interest rates in human history, and a dollar that is really losing ground. I'd like to end this by saying We talk about metals a lot, and I've talked about this Chinese Belt Road and Rail Initiative, and I just want to accentuate it for 1 second. I want people that are still listening at this point to think about this for a second. I've talked about this Chinese Belt Road and Rail Initiative as it's the largest infrastructure project in human history. And it's creating a connection between Asia and Africa. And so we talk about the need for silver in connecting, 70% nearly of human population, 45% of global GDP between these two countries. It's not just by bridges and roads, it's by digital infrastructure, so you'll need silver, copious amounts of it. So that's big for silver. But I want people to realize that all of the things that we're talking about here have an impact with the dollar, which, one could argue is at the end of its rope based upon what's happening to it and printing away its value. But all of these contracts that are being settled in this massive infrastructure program, the largest in human history, will be settled not with dollars, but with Chinese digital yuan. So you have the beginning of an indoctrination in the nearly 3/4 of human population using a new currency, the digital Chinese yuan. Now, that doesn't mean the dollar will go by the way of the dodo bird tonight or tomorrow, but I do believe it will be challenged for singular world reserve currency status in our lifetime. So when you talk about buying gold and silver, Elijah, it's not about getting rich. It's about protecting yourself for these major changes that are on the horizon. The Great Reset, new challenging reserve currencies, and just a different way of life in this country from what it was founded upon. And just the acceptance of a socialist agenda and a borderline socialist party, and how Bernie Sanders almost won the nomination 2 elections ago from Hillary Clinton is enough to make me think, what the hell's happened to the United States, where people actually would contemplate socialism? My in-laws moved here from Russia. They got out luckily, and when they did, and under some very tenuous circumstances, and they tell my children what socialism was really like, and what it was like going to a grocery store when there was nothing on the shelves. And I think these kinds of changes in culture and in ideology, it's crazy. And we're heading into a place where I would like to retrace to historical wealth. And to me, it's gold and silver. And in a period of great upheaval and uncertainty, I think you're making a big mistake to have all your wealth in dollars. And really, that's what we're talking about.
All right. Well, Andy Schectman, thank you so much for joining us today and sharing your insights once again. Before we let you go, if our viewers are interested in calling Miles Franklin or contacting us, they can call us at 1-800-822-8080 or email us at info@milesfranklin.com. Before we let you go, any last thoughts you'd like to add?
Yeah. Trust your gut. Buy on the dips. Don't chase the rallies. Don't be motivated, or shall we say influenced with emotions on these short-term dips or even the short-term rallies in price. See the big picture. It's going to go a whole lot higher than people can imagine, but as they often say in life, be careful what you wish for, because with that comes maybe some scary times in this country. So, prepare. Like your father's YouTube channel, reluctantly prepare. And I think that's the way to, even if it's frightening, even if you're not quite sure, it's important. And because the changes that we see happening will be generational. So I think it's important to take a step back, see the big picture, and do what you can to prepare. So that's what we're talking about here, Elijah. Not about getting wealthy, but about securing, your future in a world of great uncertainty. So I do appreciate your time today. It's always good to catch up with you, and appreciate it very much, Elijah. And I wish you a great weekend.
Definitely. You too, Andy. And it'll be exciting next week. It'll be 2 weeks until our next one-on-one chat, because next week we have our Mugs and Medals with a great lineup of guests, and you'll be there obviously as well on Tax Day, April 15th at 9 p.m. Eastern. So a message to all our viewers to join us there. Bring your favorite drink to drink with us, and definitely we'll have a great time. And once again, Andy, thank you so much for joining us today.
You stay well, my friend. Talk to you soon, Elijah.